30 days. If we got that in 30 days and they lasted 30 days, are we only saying there's only going to be like minimal damage? Does this not hold these companies back from making big decisions?
I think it's minimum. I mean, I'll be in Detroit, tomorrow. I think ultimately right now in terms of GM, Ford, it's very contained in terms of the impact. Now, I think when you look at Tesla, that's probably the one that's least impacted, especially given their supply chain. But our view is here, bark worse than the bite, whether it's on the auto side, and I continue to view on the China side, even on chips, even though that's pressuring names like Nvidia and others. Just as we've navigated in 2018, 2019, you don't sell these stocks because of it, because I continue to view, just like you talk about, where's the spending? I think it's going to be another robust number from Google tonight. Saw Palantir and others. AI revolution alive and well. Tariffs are not impacting that in our view.
One of the reasons why your analysis is particularly special is not just because you've been right about a lot of it, but also you travel a lot. You talk to people. You see the sentiment. Has there been, even in the past couple days, any sort of shift in the optimism because of the uncertainty?
Yeah, I think less about in terms of Mexico and what we're seeing in Canada. It's from a China tariff perspective combined with DeepSeek. I think there was just general, maybe a little more agita in terms of what that means in terms of U.S.-China cold tech war, tariffs, what the next step is. Because part of the issue is, if you go back to this last week, Nadella doubles down 80 billion, Zuckerberg 65 billion. You see just massive capex tonight from Google, Palantir, the massive AI, just another phenomenal quarter. I think the worry is, could anything spoil the party? And the only thing that spoils the party is a ratcheting up in terms of U.S.-China tension. So I think in terms of the nervousness, that's why you're seeing pressure on Nvidia, on overall tech here, as this plays out.
GM was supposed to be immune from this because they actually moved their operations and their business out of China largely to Mexico. Now they're in the crosshairs. I just wonder if other tech companies in particular are moving operations out of China more aggressively to immunize themselves from this type of shock.
Yeah, I mean, to that, look, in GM, it's been sort of one punch after another from the EV perspective in terms of from one administration to the other, the Mexico situation. But I do believe, Mary and the team navigated that extremely well. And I think GM continues to be a stock that we're bullish on here. In terms on the China side, look, my view, we talk about if Apple decided today, if Tim Cook's like, we're going to move 10% of our supply chain out of China, that would basically take about 2 years and ultimately something that could cost, what I think 30, 40 billion if it ultimately, translated. The point is that it's always easier said than done. And I think that's the conundrum, because the reality is, like, when you look at Apple, you look at Tesla, that's why Cook, Musk, 10% politician, 90% CEOs.
Dan Ives came out swinging and talking about new details that paint Nvidia in a totally different light. Have you noticed the remarkable upswing of Nvidia, a titan in the tech industry? With a 171% leap last year, Nvidia emerged as the biggest gainer on the Dow Jones Industrial Average. But what about the recent dip? Well, stay tuned as Dan Ives unravels why Nvidia's recent dip may foreshadow a triumphant rally in the stock markets once again. Welcome back, everyone, to Investocracy.
I do wonder if there is some reputational damage being done in the longer term, where people are looking at what's going on, some of the tactics, and they're saying, let's look elsewhere. Are you seeing that in any capacity?
Look, I think it's contained in terms of the demand issues that maybe that they've seen from a negative perspective, because of it. But Lisa, I think the most important thing is when you think about autonomous, you think about robotics. I mean, that's really the Tesla story. I think 90% of the story today is about that. So there could definitely be some demand issues, we'll call it contained, but what the streets focus on. You saw it last week, right? Like the bears scratching their heads, like, why is this stock not going down given numbers got lower? Because the street is focused on autonomous robotics, and that ultimately, if you look where they are in the Trump administration, Musk is in a, he continues to play chess, others playing checkers relative to this situation.
One of the big arguments, especially as the China-U.S. trade war really heats up, or trade dance, whatever you want to call it, there is a question about whether it pushes China even more to develop a parallel tech sphere to the U.S. that becomes dominant in its own right, that might be more amenable to a number of countries around the world. How realistic is that to you? Does that become more of a possibility?
I think it's not realistic just because of Nvidia. I mean, we just continue at high scale GPUs in terms of true build outs. You need Nvidia. There's one red phone that goes to Jensen. Now, obviously, DeepSeek, that was kind of the white knuckle moment. Everyone's like, does this change the whole narrative? And I think as more has come out about that, people realize, maybe the bark is a lot worse than the bite. Look, you'll have a decoupling in terms of what's happening in China and the U.S. But negotiations, it's so important because, again, U.S. needs China, China needs U.S. And I think that's why it's very, very important, especially when it comes to chips, that this could be a decoupling but not get in the way of what I view as a generational tech environment in terms of what we see with AI.
Nvidia, monster run-up over the last few years. Got to say that up front. But 22% drawdown in the past few months. Why hasn't that stock recovered? We had a week, we worked out that DeepSeek is maybe not what people thought it was. And here we are, we're still rolling over.
Yeah.
Why?
And I think that there's a few reasons. One, it's just like Microsoft has, Apple, they've sold even after, I think, better than feared numbers. I think there's worries just in general about, like, can they continue to sustain it? If any little thing happens, fly in the ointment, stock gets crushed. So you've seen a little bit of a risk off, but look, I just continue to view it 6-9 months from now. We look back at this as a golden buying opportunity, not the time where there's something structurally wrong and numbers don't.
Or we've just found better vehicles to play the theme, which is Palantir.
But to that point, that's why you look at, like, again, if you look at that Palantir quarter, they could print that press release off, put it in the Louvre in terms of just how strong it was. And it shows what they're doing in terms of Palantir is, I believe, one of the best plays in AI. But to your point, as the second, third derivatives take hold, from Google to Salesforce to others, there's going to be other ways to play. It's not just about Mag 7. There's going to be others that play into this.
Amidst its stock rallies, Nvidia experienced a dip, falling below a valuation of 30x forward earnings estimates. However, if history is any guide, such drops have prefaced significant gains. Nvidia's impressive earning track record and innovative prowess keep experts optimistic. Its balanced offering of AI tools and services generates substantial revenue, all while maintaining high profitability with gross margins consistently surpassing 70%. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Joining us for more is Dan Ives, the Global Head of Technology Research at Wedbush. Also here with us for the whole hour is Nancy Tengler, CEO and Chief Investment Officer at Laffer Tengler Investments. Thank you both for being here with us right now. Let's talk about, Dan, the epicenter of all of this. And you've been a notable bull on many of these companies, many of the technologies that are at the center of the meltdown today. Does this worry you?
I mean, in my view, it's a top 3 buying opportunity that I've seen in the last decade for tech. And the reason I'm saying that, I spent the whole weekend talking to tech executives, CIOs, individuals that I know that are going down the sort of AI arms race or going through use cases. In no way of really 25 companies does this change their sort of plans, and a lot of these could be 7, 8, even upper 8-figure type budgets. I just continue to view this as it's a model, and a lot of the details I think still need to be vetted out in terms of 6 million. Do they actually have the H100s, how they actually built it? But this is something we're going to look back on, and I think the street and the market got this way wrong. In no way does it dent our bull thesis. That's what we've been telling clients really since the weekend. These are the times you own these names.
Dan, not all of the companies at the center of the sell-off today are necessarily affected the same way. Chip stocks, Nvidia, Kelly mentioned it, $500 billion in market cap lost. That's more than the size of ExxonMobil. That's roughly the size of United Health Group in terms of an entire company lost in market value. Some are affected more than others. Mega cap technology, not as much so across the board as, say, Nvidia per se. When this is a buying opportunity, how much of a buying opportunity and how specific do you have to be?
Well, first on Nvidia, that continues to be, I think, the golden goose in terms of what Jensen and that company are ultimately. There is one chip in the world. There's one GPU that's fueling AI, and it's Nvidia. And when you think about these build-outs, when we talk about the enterprise, the $2 trillion of AI CapEx next 3 years, that doesn't change from DeepSeek. We're talking about one 1,000ths of ultimately the build out that you're going to need for a lot of these enterprise use cases. You look at names like Palantir, you look at the hyperscalers. I could argue with inferencing, if you actually think costs are coming down, it's actually bullish for even some of the software players, names like Salesforce, ServiceNow, Oracle, and others. I just think this is when you look at NVIDIA, I think we sit here 6, 9, 12 months from now and look at this as a moment. It was a golden buying opportunity, and in no way changes our bull thesis for where this is all headed.
This historical ebb and flow accentuates the possibility of another peak. What does this mean for potential investors or those already holding shares? The broad consensus indicates that Nvidia's stock, after its valuation dip, is poised for another pulse-racing surge. Despite the inherent uncertainties of the stock market, Nvidia's financial health, dominant market stance, and relentless innovation establish a compelling narrative for its future. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
So let's act like today didn't happen. As you were looking at the universe of getting exposure to AI across, a number of different, let's call it just ancillary industries, but or straight out of Broadcom, or straight out of some part of the legacy players we know about. Where are you coming into today before this news?
Look, Tim, I think you're looking at not just Broadcom, but what I believe is sort of the second, third derivatives. I think this is bullish for software. I think when you look at names like Salesforce.com, Mongo, of course, names like Palantir and others, because as the data centers get built, it's skating to where the puck's going. Where are the use cases? That's really what the key is going to be over the next 2, 3, 4 quarters. And I think this is bullish for software, because data centers, they get built out, the use cases are going to be software driven.
But the use cases aren't clear right now. I mean, are we going to be at a point where we have the data centers in place, but the use cases, that part of the equation hasn't exactly caught up?
Yeah, I think right now it's starting to catch. I mean, I think we saw it with Benioff and Salesforce. We've seen it with ServiceNow, Palantir, and now the use cases are really going to start to explode. Because these companies, when you talk about all the AI CapEx, it's about the multiplier. For every dollar spent on an NVIDIA chip, there's an $8 to $10 multiplier across the rest of tech. That's bullish for all these data center players, bullish for software, and that's going to really be the focus going into earnings season in terms of playing out these sort of next derivatives of AI.
Nvidia's current stock trajectory is a fascinating study of resilience and promise. Following its recent valuation drop, patterns suggest a rejuvenating upward rally may be on the horizon. This isn't a blind leap into the void. It's a strategic play backed by Nvidia's financial integrity, market dominance, and zealous commitment to innovation. But what do you think? Share your thoughts. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.